Welcome to USG FX Daily Video. Before we begin, I would just like to make a note that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. The US dollar index, which measures the greenback strength against a basket of 6 major currencies, surged to a fresh high of 99.13 this morning, which, if you view another contract for the dollar index, was a 28-month high, which was at 99.47. Nevertheless, both are still rallying and now close to this rejection point if you look at this contract of 99.30. What is interesting is that the ADX is strengthened and the whole picture now looks a little bit more determined to see a push higher. This, on the flip side, could see the euro crush the level of 108.65, as we're only now a handful of points away from there after printing a low of 108.85 this morning. A break of 108.65 would give me a measured move to 107.10. But while trading from the short side, continue to keep your stop losses very close in accordance to your risk management in case we do get a rejection, because the ADX is overheating since it broke above this previous high. So I'm a little bit careful in my bearish call, but stops are likely to be triggered under 108.65. Let's see how the market plays in the next 24 hours. The bears are still evident in the Australian dollar since last week after Governor Phil Lowe signalled a possible cut in interest rates today. Later at 2:30, we do get the announcement of the RBA interest rate decision. It is widely expected that they will go 25 basis points and take the interest rate down to 0.75%. This was because last month, although strong employment number surged to 34,700, it was led entirely by part-time jobs. Elsewhere, former Treasurer Peter Costello warns rate cuts won't do much for the economy. Last Thursday, Mr. Costello said lowering the cash rate from 1% might result in a lower Australian dollar, but would have a limited impact on the real economy. Yesterday, China's Caixin Manufacturing Purchasing Managers, that is, PMI, surged past the 50.2 forecast to 51.4, which is pretty much a good number. China is off for most of this week due to the celebrations of Golden Week, but still, nevertheless, the figures are still updating. So keep an eye at 2:30 today for the initial rate policy meeting announcement from the RBA and see if they do move rates. From a technical point, I am looking down towards 66.80 as a target, as the low today now has been 32. Do be on your guard and keep stop losses according to your risk management, because if we get a rejection from this level of 66.80, which we saw a long-legged dragonfly, a bullish outside range day, or also known as an engulfing candle, was again inked for the third time off that challenge and produced a bullish rally. But if we do take out 66.80 and there is no evidence of a bullish challenge, then 65.5 is on the cards for the Australian dollar, with the resistance seen around 67.75 to 68.25. Since the large candle that was posted here, if you can see the last 4 trading days in dollar yen, the market is getting smaller and smaller and smaller as it gets closer towards 108.30.60. I'm looking to get short around this level because I believe the market's flat as a tack, as you can see to the MACD, and will foul from the challenge. So the pullback is inevitable from this level, so I'm expecting to see further risk to the downside to 107.55 to 106.70, where I've outlined it here. Well, since the break of the 124.15 level in sterling, the market is still remaining bearish, and with the MACD and the RSI married up, looks to a 121.70 target. Resistance at this stage seen at 124 figure 25, although slightly wide, but we can still see a whipsaw price action inside here, so I have to keep my level a little bit higher than normal. Well, it would seem the head and shoulders pattern has come through for the gold after taking out the level, which was key at 1,478. The break of this saw the market plummet to a low of 1,464 overnight. The $14 drop has given further confirmation that the further initial downside pressure will increase. and therefore from the measured move of the head to the neckline gives me a target somewhere around 1,420 to 1,435. At the moment, the bears are still continuing to push the gold lower. So let's see how the market plays out in the next 24 hours. Oil plummets overnight by 3% and now questions whether the recovery can come back until the market hits the lows around $51 to $52 a barrel, with the three candles completely negated of the two dragonflies and the hammer. The bears are still very much intact as the ADX strengthens. So it would seem to me that the technical implications overwhelmed the pattern here, and the bears are still maintaining the roll and pushing oil lower. The Nasdaq was slightly stronger overnight due to the fact that figures coming out for Apple were a little bit stronger than expected. Overnight, the share price for the tech giant advanced by 2.35% and pushing the share price up to $223.97. Chief Executive Officer Tim Cook told a German daily Bild that the iPhone sales were off to a strong start. So this encouraged initial move in the in the Nasdaq, and now looks for a target of 7,840 and see if that level can cap and move towards the upside. Technically, we're not overly strong. German DAX, well, the market has still been somewhat questioned to the Dragonfly, the Doji. Now we're pushing a little bit higher. If the market can break above 12,450 to 70, then that would throw the tail into the bearish case and may see a further test to the upside to 12,600. But let's see how it plays in the next 24 hours. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report and hope you enjoy the great start to this new day.